Good morning, everyone, and welcome back to Market Movers Daily. And today is December 5th, 2024. We're diving into everything you need to know about the US stock market, from today's trends to what you can expect as we roll into the next trading day. Let's get into it. Let's start with today's numbers. Wall Street opened this morning with a cautious tone. Investors have been digesting the latest economic data, including November's job numbers released earlier this week, which showed steady growth but a slight uptick in unemployment. That, paired with ongoing discussions from the Federal Reserve, has been stirring mixed emotions in the market. The S&P 500 saw a modest climb of 0.4% earlier in the session, led by strong performance in the tech and energy sectors. Apple and Tesla were among the big winners today, with Apple gaining 1.8% after unveiling its newest AI chip advancements for enterprise use. Meanwhile, crude oil prices rebounded, pushing ExxonMobil up by 2.3%. On the Dow Jones, we saw a more conservative movement, a rise of just 0.2%. Boeing was a standout here, up nearly 3% following news of a significant defense contract win. The Nasdaq, on the other hand, was the star of the day, rising 0.6%, driven by surging semiconductor stocks. Nvidia and AMD continued their hot streaks, gaining 2.7% and 3.1% respectively. However, not everything was rosy. Retail stocks faced some pressure as holiday spending forecasts have come in weaker than expected. Target and Macy's both slid, with Macy's falling over 4%. Analysts are pointing fingers at tighter consumer budgets and rising credit card debt. Shifting gears, let's talk about the macro landscape. The Federal Reserve's meeting minutes released yesterday are still echoing in traders' minds. While inflation appears to be cooling, the Fed is signaling they're not done yet. The possibility of one more rate hike early next year is keeping bond markets in focus. The 10-year Treasury yield edged higher today, sitting just above 4.3%. This has been putting a bit of pressure on growth stocks, although the market seems to be shrugging it off for now. A lot of eyes are on tomorrow's initial claims report for unemployment, which will give us a better idea of where the labor market stands. Alright, let's turn our attention to the road ahead. What should you be watching as we head into the next trading session? First, tech investors need to keep an eye on the semiconductor sector. Taiwan Semiconductor Manufacturing Company, TSMC, is set to release its quarterly guidance tomorrow night. Early indicators suggest a potential slowdown in demand, which could ripple through companies like Nvidia and AMD. Next, all eyes will be on Friday's Producer Price Index, PPI, data. This report will give us another key inflation reading, and Wall Street will be dissecting it for any signs of future Fed action. If the numbers come in hotter than expected, expect volatility in rate-sensitive sectors like real estate and utilities. Finally, the energy market will remain in focus. OPEC's meeting this week hinted at further production cuts, which could drive oil prices higher. If crude continues its upward trajectory, expect energy stocks to benefit, but it could also reignite inflation concerns. So, what should investors be doing right now? If you're a short-term trader, keep your stop-loss orders tight. The market is in a fragile spot where one surprise headline could swing things sharply in either direction. For long-term investors, this might be a good time to review your portfolio. Defensive sectors like healthcare and consumer staples are holding steady, but with rates likely to stay higher for longer, dividend-paying stocks could provide a cushion. Also, consider dipping a toe into energy stocks if crude prices keep climbing. That's a wrap on today's analysis. December 5th, 2024, brought plenty of action, and the market's giving us some big hints about what's coming next. Whether you're an active trader or a long-term investor, the key is to stay informed and be ready for those market moves. If you found this breakdown helpful, hit that like button, subscribe to the channel, and don't forget to ring the notification bell so you never miss an update. I'll see you tomorrow with a fresh market recap and forecast. Until then, stay sharp and happy trading.